Manish Jain is here with us. Manish, do you see this mid-cap, small-cap nervousness to accelerate on the downside, or you think it's par for the course?
No, I think this was warranted. It was desirable with the kind of rally that we've seen, especially in the mid cap space. The mid cap index is trading at somewhere close to 26, 27 times, or rather was till yesterday, trading at 26, 27 times kind of a valuation uh, premium to Nifty. I think the intensity of the rally has been very, very significant. And a little bit of a pullback, a little bit of a healthy correction will give people an entry opportunity into some of these stocks, some of these ideas, some of these businesses, which still have a very, very strong risk reward balanced out between them over the course of next 2 years. Remember, the rally in the last 12 months has not really been homogeneous. The rally in the last 12 months has been uneven. There are still pockets of value which are still available. There are sectors X of BFSI which still are exhibiting very, very strong growth. And from that perspective, this becomes a very good entry opportunity, a very good stock picking opportunity for people. I do not expect this carnage to get over today. I think it will last a couple of days. It is going to be a very decently healthy sort of a correction. And anytime the markets are in going to be more than 5-6% sort of a correction, I think I'll be picking up stocks from a 3 year perspective.
That's interesting. So, one, you expect it to last a little bit. Two, it was overdue, so it's only making the market healthier. And three,
Yes.
you should be a buyer in this decline. So that is something interesting. Let me talk a little more specifically about the NBFCs. Now we all know that the NBFCs are some people call it shadow banks. I don't like to use that word because it helps the unbanked society, part of the society. But anyway, somebody needs to do that job, right? Banks can't
Yeah.
do it all alone. But again, it keeps on coming under regulatory glare as well because of some process issues here and there. And then, of course, regulatory action gets them in their place. Would you be a buyer
Correct.
in NBFCs in this decline?
So, this whole thing started off about a year back or so when RBI started getting concerned about unsecured credit in the system and the way it was ballooning out. And that was a very right thought process because at some point of time or the other, the intensity with which the unsecured credit is rising is going to lead to an asset bubble at some point of time or the other, especially in the smaller banks and NBFC sectors, right? So this regulation is actually again very healthy, very warranted, and some of these large NBFCs have actually corrected very meaningfully, very healthily. Now, individually, if you look at it, I think there are no homogeneous bets that I'm going to be taking at this point in time. But individual stock buys, there are pockets which are now starting to emerge out. And if you're ready to bear the pain from a 3 to 6 months perspective, there is a lot of money to be made in NBFCs from a 3 year perspective.
View once again that one should be a buyer if you have a 1 to 3 year view because also the declining interest rate scenario actually starts helping these NBFCs more than actually banks. Banks and IMs actually come under pressure. What are
Yeah,
your
but
yeah?
I'm not expecting the rate cuts to happen anytime soon, Ajay. That's the other factor of it. I think it's going to be very, very back-ended, probably more towards the last quarter of this calendar year. I don't see in the near future RBI to have any reason whatsoever to kind of cut rates.
Manish, manufacturing. Do you see that this shakeout could mean a little, manufacturing space stocks which have not corrected, very high valuations but very strong structural story? Do you see them also getting corrected, and would you be a buyer there?
So there are sectors which have I earmarked in my mind, right? And those are the sectors I'm looking at. There is IT services. I think that's going to be the dark horse of this year. The earnings have kind of bottomed out over there, and valuations are still fairly reasonable, especially in the large cap space. Pharma again is going to be a fairly structural story, so that's another space where I'm going to be out shopping. Autos looks like it's going to be very structural again, especially more bullish on two-wheelers than on four-wheelers. But that's another space where I'm going to be going shopping. And some of these themes which have started to emerge out only in the last 3 to 5 odd years, which is basically infra, manufacturing, renewables. I think these are the themes that are going to be very relevant from the next 3 to 5 year perspective, irrespective of the way elections unfold. Now, I know there is a certain bit of an expectation that has been set into the market. There is a certain bit of a continuance which people are expecting. Nonetheless, I think this policy initiative is not going to get rolled back. Government capex continues to remain very, very strong. And these are the areas where I'm going to be continuing to be very, very bullish on.
Thoughts on the city gas distribution stocks? There are a couple of them there, and the latest commentary from the minister is that the end users have not benefited from the city gas reforms. They expect to pass on the benefits once again, and big cuts coming in on Gujarat Gas, Mahanagar Gas, IGL, etc. Anything you like there? Would you be buyer on declines there?
I would look at more like either the renewable space, which kind of plays out into the next 3 to 5 years, sort of a future where you can really play like the way you played or tried to play EV, say, either right now or a year back, something in that zone, which ties in with this whole environmental theme also. Or otherwise, the power demand in India continues to remain very, very strong. So my sense here is that why not just look at on dips, every healthy correction, the conventional power companies, which again can add a lot of value into the portfolio.
What are your thoughts on pharma, by the way? Pharma, some of the big companies are talking quite positive on that next few quarters outlook.
So pharma again is a sector that I had alluded to earlier, which was second in line with IT. And this is a sector which is coming out after a very long lull, right? Almost a 5, 7 year sort of a sideways movement. This is one sector which is coming out of it. I think what we've seen in the last 6 to 8 months is just the tip of the iceberg as far as the rally is concerned. This is here to stay. Most of the pressures that we had in the pharma sector from a US FDA perspective, generics pricing perspective, I think they are all in the past, they are all in the history now. And from here onwards, if somebody is looking at a great structural 3 year sort of a bet, I would definitely look at pharma.
Great. All right, Manish, we'll let you go on that one. Thank you so much for your time today.
Thanks, Ajay.